Hey there, savvy investors and Singapore market enthusiasts. Welcome back to the Investing Iguana channel, where we dive deep into the world of investments to bring you the most insightful analysis. I'm your host, Iggy, and in today's video, we're going to unravel the mystery behind the latest buzz in the investment world, Mapletree Industrial Trust, rated a buy at $2.60. Why is this REIT turning heads in the market? What makes it stand out from the crowd? Stick around as I break down the key factors driving this rating, from financial resilience to operational excellence, and why it could be a golden opportunity for your portfolio. You don't want to miss this deep dive into one of Singapore's most promising investment opportunities. Mapletree Industrial Trust, a beacon of stability in uncertain times. Mapletree Industrial Trust, often referred to as MINT, is a shining example of stability in the midst of uncertain times. This trust is a key player in the dynamic world of Singapore's real estate investment trusts, also known as REITs. Despite the constant changes and challenges in the market, MINT has proven its resilience time and again. Recently, MINT reported a stable distribution per unit, or DPU, for the first 9 months of the fiscal year 2024. The DPU, which is essentially the profit distributed to shareholders, was 10.07 Singapore cents. This figure slightly exceeded what market analysts had predicted, indicating a strong performance by the trust. What's even more impressive is that this DPU represents only a minor decrease of 1.7% compared to the same period in the previous year. In an economic climate where many businesses are experiencing significant downturns, a dip of less than 2% is a testament to MINT's robustness. This performance sends a positive signal to investors. It suggests that despite the uncertainties in the market, MINT is capable of maintaining a steady performance. This makes it a potentially attractive option for those looking to invest in a reliable and resilient trust. In conclusion, Mapletree Industrial Trust continues to be a beacon of stability in these uncertain times. Financial fortitude amidst market fluctuations. Mapletree Industrial Trust, also known as MINT, continues to demonstrate financial strength even amidst the fluctuations of the market. One of the key indicators of its robust financial health is its active management of debt. Through strategic financial planning and execution, MINT has successfully reduced its interest costs to about 3.1%. This reduction, albeit slight on a quarter-on-quarter basis, is a clear testament to the trust's prudent financial strategies. The trust's financial fortitude is further evidenced by its leverage ratio, which saw a minor increase to 38.6%. Despite this increase, the ratio remains comfortably below the 40% mark. This is an important detail as it reflects a conservative yet effective management approach. Staying below the 40% threshold means that the trust is not overly reliant on borrowed funds to finance its operations and growth. This conservative approach to leverage helps to mitigate risks associated with high debt levels, such as interest rate risk and credit risk. In essence, MINT's financial strategies have allowed it to maintain a strong financial position, even in the face of market uncertainties. Its ability to manage debt effectively and maintain a healthy leverage ratio underscores its financial resilience. These factors, combined with its stable performance, make MINT a beacon of financial stability in an unpredictable market. This level of financial fortitude is what makes MINT stand out among other real estate investment trusts, and it is a key reason why investors may find it an attractive investment option. Operational excellence, the Singapore story. One of the key indicators of this success is the rise in average rentals. The rentals have increased to approximately $2.21 per square foot per month. This increase is not just limited to a specific segment, but is observed across all segments of properties managed by MINT. This widespread increase in rentals is a positive sign, indicating a healthy demand for MINT's properties. A specific example of MINT's operational success can be seen in the case of 165 Khao Lang Way. This property has been experiencing a gradual increase in occupancy, which now stands at about 51%. While this might seem like it's just over the halfway mark, it's important to note that leasing up a property is a gradual process. Achieving a 51% occupancy rate is a significant milestone, and it shows that MINT's strategies for attracting tenants are working effectively. These figures, from the rise in average rentals to the increasing occupancy rates, underscore MINT's ability to navigate the local market adeptly. It shows that MINT understands the dynamics of the Singapore property market and is able to make strategic decisions that result in positive outcomes. Navigating challenges in the U.S. data center market. In the United States, Mapletree Industrial Trust, MIT, has been navigating some challenges, particularly in the data center market. This segment of the market has faced a few headwinds that have tested MIT's resilience and adaptability. One of the challenges has been the phased return of spaces from a major lease with at and EP258. This means that over a period of time, spaces that were previously leased to at and EP258 have been returned to MIT. This could potentially lead to a decrease in occupancy rates and rental income. However, MIT has been able to navigate this challenge effectively. Another challenge has been the sale of data centers that were leased to Subsector to another company, Brookfield. This sale could potentially disrupt the steady flow of rental income from these data centers. However, MIT has been able to manage this situation adeptly. Despite these challenges, MIT has been able to mitigate the potential negative impacts through successful lease renegotiations. By renegotiating the terms of the leases, MIT has been able to ensure a steady flow of rental income. This shows MIT's ability to adapt to changing circumstances and to make strategic decisions that protect its financial health. In addition to successful lease renegotiations, MIT has also benefited from an estimated one-off revenue boost of $2 million in the fourth quarter of the fiscal year 2024. This additional revenue has helped to offset any potential losses from the aforementioned challenges. Investment appeal: why MIT is a buy. MIT continues to be an appealing investment option despite experiencing a 3% dip in its share price. This dip is in line with the FST-REI index, which is a benchmark index for real estate investment trusts, REITs, in Singapore. Despite this dip, MIT remains a preferred choice for investors. One of the reasons for this is its focus on the rapidly growing data center subsector. As more and more businesses move their operations online, the demand for data centers is expected to increase, making this a potentially lucrative area for investment. Another factor that adds to MIT's investment appeal is its diversified exposure across different geographical markets. MIT has properties in Singapore, the US, and Japan. This geographical diversification helps to spread the risk and increases the potential for returns from different markets. In terms of valuations, MIT is also attractive. It is currently valued at approximately 1.3 times its book value. This means that the market price of MIT's shares is about 1.3 times the value of its net assets. This is considered a reasonable valuation for a REIT, making MIT a potentially good buy for investors. Furthermore, MIT has a forecasted yield of around 5.4% for the fiscal years 2024 to 25. The yield is a measure of the income an investor can expect to receive from an investment, expressed as a percentage of the investment's cost or current market value. A yield of 5.4% is considered attractive in the current low-interest rate environment. Adding to MIT's investment appeal is the fact that DBS Group Research, a respected research group, maintains a buy rating for MIT. They have set a target price of $2.60 for MIT's shares, which suggests that they believe the shares are currently undervalued and have the potential for price appreciation. They anticipate an 11% total return, which includes both the potential for price appreciation and the income from dividends. In conclusion, Mapletree Industrial Trust's strategic positioning in high-growth sectors and its strong operational performance in Singapore make it a standout choice for investors seeking stability and growth in the dynamic world of REITs. And there you have it, folks. We've dissected the reasons behind the strong buy rating for Mapletree Industrial Trust at $2.60. From its robust financial standing to its strategic operational moves, MIT is shaping up to be a potential star in your investment portfolio. If you found this analysis helpful, please hit that like button, it really supports the channel. And if you're keen on staying updated with the latest and greatest in the investment world, especially tailored for our Singapore market, don't forget to subscribe and turn on notifications. Your support means the world to us here at Investing Iguana. Until next time, keep those investments growing and I'll see you in the next video. Happy investing!